Next strategy, Qualified Charitable Distributions. QCD allows individuals age 70 and a half or older to donate directly from their IRA to a qualified charity. The donation counts towards your RMDs and is not included in taxable income. I'll give you a really easy example. You go to church every week, you put $20 cash on the tray or in the basket, and you do that every week for, let's say, 50 weeks. $1,000 goes to donate your donation to the church. Fantastic, wonderful for you and for the church. If you pulled that money out of your IRA, for example, so you get the $1,000, you'd have to pull out around $1,300, depending on your tax bracket. $300 to Uncle Sam, $1,000 in cash that goes in your pocket, and you put it in the basket or the tray, $20 every week. That $1,000 that went to the church costs you $300 roughly, depending on your tax bracket, in income taxes. A better way to do it, get a checkbook for your IRA. Write a check out of your IRA from your IRA checkbook and send it to the church, $1,000 a year. That offsets your required minimum distribution and is not included in your taxable income, avoids the standard deduction limitation. So even if you don't itemize, you still get the tax benefit, you still support charity. It's a very tax efficient way to donate to causes that you care about. I have clients who do this all the time. They either write checks out of their IRA checkbook or they send me a list, 5, 10, sometimes 15 different charities that they want to have distributions go to directly from their IRA. $1,000 to the church, $500 to this charity, $100 to that one, $250 over here. It all adds up over time and is all a tax efficient way to take care of those charities. Interestingly, the QCD limit for one person, an individual in 2026 is $111,000. A couple can do $222,000 every year if they have the money, if they don't need the RMDs and they want to reduce their tax bill, they can give that much to charity. It's very valuable, very efficient way to do giving to charity. We do have one question here from a client. Do you have to go directly to the charity with the donation, or can you put that in an account, a distribution account, where you can then distribute out from there? Well, you can use a distribution account, so to speak. That's actually called a Charitable Remainder Trust. We use those for people who have large tax bills in a given year, lots of capital gains. Let's say they sold a business, they have a big capital gain tax bill. You can front load all of your future charitable contributions in a Charitable Remainder Trust and take the tax deduction today for the present value of your future charitable contributions by funding a Charitable Remainder Trust. It's like a QCD in bulk, but it's not quite the same thing. It's called a Charitable Remainder Trust. And if anyone is in that situation, let me know. QCDs, you want that money to go directly to the charity.